2017 was an excellent year for equity investors. It was one of the best years on a risk-adjusted return basis. Q1 this year has been a lot harder. We started out really well in January. Markets were up 8%, I think, at one point. And then what happened over the following months, markets collapsed a little bit on the back of these volatility funds. They rallied back. And then in the last couple of weeks, we've seen a lot of talk about Trump. So markets finished down about 1 to 2% on the quarter, but it was a very volatile quarter to get there. Yeah, some of the risks. We, as a house, have a very, I'd say, overall positive view. Still, even though we've had a bit of volatility at the moment. But the biggest risk, I'd say, at the moment is one exogenous risk, which is Mr. Trump does something really silly. He has a history of saying lots of things, but how much he actually does, we're yet to see. And I think at the moment what you're seeing is markets are trying to push higher, but Trump keeps dropping tape bombs, which are more tariffs than that. Now this then could escalate into, say, the Chinese selling treasuries. I'd call that an exogenous risk. The bigger and softer, longer term endogenous risk is that the Fed over tightens. So that is interest rates go up too much and they end up slowing the economy and they push it into recession. So they're the two biggest risks. So we still remain relatively bullish, though the last months tested that somewhat. We would have expected markets to push a bit higher. So at this point, we remain fully invested. So that is, we're not carrying much cash. And the main funds are also positioned for the upside. So where we see is Japanese and Asian markets continuing to outperform. One thing of note in the last couple of months is emerging markets are generally seen, you sell them when you get worried about the world. So one would have thought that if you're worried about tariffs and Trump and China and a trade war and that you would see EM underperform. EM actually outperformed the last couple of months. And that's actually an interesting tell. That says to you that markets, if they do start to rise again, will probably be led not by the FANG type stocks out of the US, but by EM stocks. So that's where we're focusing our effort. Yeah, so some of the new additions over the last quarter that we put in, I think one stands out for us, or for me in particular, as an interesting stock that our viewers might know, is Pilot. Pilot makes pens. Now, the pen sector globally is actually really interesting. There's only 6 listed pen companies, of which Pilot and Mitsubishi Pencil are listed in Japan. Now, Pilot is a very, very cheap company. Now, what's interesting is pen usage, you may not think this, is actually growing, particularly in developing and emerging markets like that. And these guys are taking share. Now, they've traditionally not wanted to engage with investors. Now, we've been working really hard with them to try and convince management that they have a great story to tell. They pay out dividends, they care about shareholders, they're focused on running their business, but they should get out there and actually explain to the street and explain to investors a bit more and engage a bit more. So we think this is a fantastic prospect and we're hoping we can work with management to grow this and grow their business as well.